Remember Sunday when we were talking about the internal indicators and the different things we look at? So one of the first things that we're looking at, or that I'm looking at when the market's open, is like, okay, which sectors are leading the way higher or lower? So as you can see, as we're going down here, and the resolution isn't that great, but you've got computer technology, hardware, software. Now look up here, number 3. Can you guys see what that is? Brokers. All right, so we've got a decent pop up in the gap. By the way, the pre-market volume was moderate to heavy this morning. So you've got actually some potential moves here in the gap, but you got brokers near the top of this rally. That is bullish. That is good for longs. Going down here, you've got a lot of internet stuff going on. That's fine. What I'm doing now is looking for banks. The banking sector is only up 0.24%, whereas the brokers are up over 1%. Okay, the key thing I'm looking for in sectors, any move over or under 1%. Okay, anything that's under 1% is just noise. So you may have a day where the markets are, everything's green, but only 2 sectors are up over 1%. It means you really don't have a real move happening there in the markets. The other thing I'm looking for here right away in the morning are the ticks. What are the ticks doing? So we've got this kind of decent move higher. The ticks really haven't had any extreme levels at this point. We haven't gone up to the plus 600 ticks or the minus 600s or anything like that. I'm also looking to see where the put, and this chart's a little scrunched together, I'm looking to see where the put call is setting. Right now it's 1.07, but remember one of the things that we talked about, we're not really too concerned about the put call until after 10 o'clock. By the way, for gap plays and the put call, there's generally not a correlation because since the first half hour the put call is kind of meaningless, you're not waiting for the put call to see whether or not you're going to take a gap. All right, looking at the trend and the trend Q. The trend is at 0.69, the trend Q is 0.46. Very, very low numbers. Okay, so there's only 2 things that are going to happen today. Either first, this is going to be the low of the day and it's going to start trending higher and higher and higher and higher throughout the day, meaning what? The market's going to do what? Or it's going to pretty much stay in this range all day long, which is very, very bullish. Okay, we don't know at this point where it is, but I am making a mental note where the trend and the trend Q are starting the day. All right. The other thing on here I want to look at is the ticky. The ticky's telling me right away, first in the morning, if there's any buy or sell programs that are hitting the market. So you can see here in the first few minutes, we haven't had any readings that have hit plus 26 and any readings that have met minus 26. So generally what we have here is it's a gap up, bullish open. There's a lot of sectors that are moving with the gap. We don't have any extreme tick readings. We don't have any extreme ticky readings. Okay, so there's not any massive buying that's coming into this. We've got low trends and trend Qs. So now I'm looking at all this I'm not even really concerned about the actual price chart at this point. I'm just like, I want to gauge okay, what are the internals doing? So at this point, what I'm going to be doing then, and during the day, is I'll have my regular, the chart that we were looking at yesterday that had all the pivots and the squeezes and the scalper buys and sells. I'll generally have that right next to this screen, and you can just sit those and watch them together as things are taking shape.
John,
Yes?
looking at the pre-market volume.
Oh, yeah, here, I'll show you. So what I'm looking at for pre-market volume, this is one of the things that we're talking about in terms of playing the gaps. And you can see, I'm going to click on this here. You can see these tabs down here. I've got sectors, the Dow. This will show the Dow stocks and how they're sorted. Just general futures markets, some other internals. But the single stock futures list, these are all the stocks that trade single stock futures. And if you're wondering where that list comes from, it's a website called onechicago.com. Just literally O-N-E, Chicago.com. And I'll go in there and put these are not the actual single stock futures with the underlying cash stocks. And what I'll do then is at 9:25, I'll just double click on volume, and I'll just see which ones are trading the most volume and which ones are trading the least amount of volume. And then I'm also going to look at the 4 stocks that I always like to look at, Applied Materials, Maxim, Novelis, and KLAC, and see where they're trading. This morning, you had a couple of them trading under 30,000. Applied Materials was trading about 90,000 shares. I think it was either KLAC or Novelis that was trading like 40,000 shares. So that's a moderate gap, meaning we've got an 80% chance that we're going to retrace 50% of the gap.
You said what time of day do you look at that?
At 9:25 Eastern. So, yeah, no, and any times I say are always going to be Eastern. Because what we're looking for in a situation like that is a market that actually is whether or not it's got any volume behind it. So on a day like this where you've got kind of moderate volume, I will play, look at playing like half a gap fill. So then we'll go over to the chart. Now I got to update these pivots. But you can see right away where we opened this morning near the highs right there. And we've already got the scalper cells in place. Now what I want to do real quick, I just want to update the pivots. What's the pit doing?
Nothing.
They're quiet?
Yeah.
Is it louder on the up moves or down moves?
It is, but it's running out of gas. It just ran out of gas. All right, so when Ben comes over here, he's going to explain to you what the hell he's talking about, all right? But I don't really listen to him. I listen to behind him. So can you guys hear any pit noise behind him? You hear how more voices? You can't really pick it up. It takes a little while for you to pick it up.
I'm saying it's pretty quiet right now.
Yeah, it's pretty quiet. There's not a lot of noise. I'm gonna turn it up just a little bit, John. So take a look at John's chart. Well, you can't really see it on that one. I'm looking at a 2-minute chart. So they're trying to draw paper in. You got a guy trying to bid up. Price right now is just trading about pretty much where it opened up at, okay? So there's not a whole lot going on. You've got the Fed speaking when? Tomorrow? So it's going to be kind of slow. There's a seller coming in. On the downside, now there's no noise. So what you're looking for is you want to first sell on open. You want to pay attention to. I'm going to put this right here so I can see it while I'm standing up here. All right, so a top 10 guy just means a guy that's usually relatively successful about, has size, messes around with the market, will take the bid or the ask. So now right now the market is just broke the opening lows, all right? But there's not a lot of noise on the break, okay? So it's not really a good pit noise signal, okay? It takes a little while to get used to it, but you kind of gotta get used to training your ear to listen for the subtle changes in volume. I mean, the audible volume. If you want to keep track of what he's saying, you can, but it takes a while to get good at it, okay? So now pit noise is picking up a little bit with the down move, and earlier there was a 50 tick that fired off, and the TTM had rolled over. While John was talking, I was showing Cooper, I was like, see right here? Now the TTM's starting to change color for me, and the 50 tick just fired off a short. So I'm actually short on the Dow. And looks like it's working so far. I like how the pit noise is gradually picking up a little bit. So they're kind of stair-stepping it on the way. Hear the noise now? Here it's a lot. See how it's a lot louder? So when that happens, I want to give them what I got. It's going down. It's almost at a half a gap fill. Not yet, but I like the noise to the downside. Time and sales is rolling. All right, so I'm flat now on the Dow and just made 8,280 bucks. All right. So now just off the gap trade, but it's not a pure half a gap fill, but it's a little bit of a. Yeah, I got out early, all right? So, listen to the pit. You hear how the pit still sounds good to the low side? So it will probably go lower, but I could care less. Okay, if the price is going down and the noise is real loud and you're short, that's a good thing. If price is just standing there, trading sideways, and then noise gets loud, there's no conviction one way or the other. If you're short and price starts going up and noise is real loud, you're screwed. You're going to get stopped out. I mean, you're just going to get stopped out. All right? I have no clue. Not that many. I mean, they're not a killer trade or anything. Yeah, the reason I was getting out is because I had a 50 tick signal that got me in the trade, and the TTM colors started to change for me, okay? When I came in first thing this morning, all the TTMs on my other time frames that are on 24-hour Globex was going, short it and you're crazy, short it and you're crazy, short it and you're crazy. So I had to wait for it to run out of gas, okay? So I waited until the TTM started changing from blue to red, and then I also had a 50 tick that fired off a short. So I went short at the market, okay, and then just waited for it either to take my 10-point stop out or to go lower for me. In this case, it went lower, and I just exited the entire position on loud pit noise. I didn't get short on loud pit noise. I exited on loud pit noise. If you shorted on loud pit noise, just right now, you're only up about 4 points. So you want to, when you use pit noise, it's like watching two boxers go at it, because you can see, a guy sitting there jabbing, go, dude, just duck. You're sitting there watching a ball game or listening to a ball game. You can hear the crowd noise get louder or quieter if something's really going on, okay? So you have to learn how to play those guys. And I mean, you're either going to let the market play you, or you need to learn how to play the market. You're not really going to play them. It's just they're so caught up in the moment, going bid ask, doing this, that they don't really know what they're doing. I mean, they're just taking order flow. Like, yeah, they can only yell and scream and take orders and be all excited for so long. And then they got to rest a little bit because they'll lose their voice. So then they'll go crazy, and then they'll rest for a minute, and then they'll go crazy again. All right? So, I mean, that's how I use it. And right now the pit is at the gap is at a half a gap fill and just screaming to the downside. Turn up pit noise real quick once.
70
It's good. I mean, volume on the pit right now is probably about 6 or a 7. That's good. And there's more offers out. We're trading right now at the low of the day on the S&P. So, I mean, there's nothing magical about time and sales is rolling. It definitely looks like a really good gap fill.
He's calling the ENS.
Ben is calling the big S&P. The big S&P, which is only pit traded. He does have another service, which is eSquawk, that just trades, that'll call off the minis. And it's just a guy sitting here looking at a order book, calling off what's going on. I don't really like the E-mini product. I don't think it's that good. I like him better.
Do you have, yesterday we got into the EMAs a little bit. Can you just pop the 821 EMA on there?
Oh, sure. Yeah, I'll do that. A couple of things I just wanted to point out here. What I'm doing right now is putting in a bid here at the daily pivot. I always like to fade the first move of the daily pivot, regardless of the gap. The gap's a separate play. And a gap fill here, you can see it. We're at 10,641, so where's a gap fill? Right at the pivot.
3 above.
Yeah. So I'm going to put in a limit at 10.62. I can add right. 10. So I just take this, I round it up. So where's going to be my entry? 10.623.
The actual entry for the question was what actually got me in the trade. It was actually the TTMs, and you guys will break when Ben gets over here. You guys can come up here. The TTM color shift kind of warned me.
On the 50 tick?
No, on the first thing it changed on was the 89 tick, and then the 1, and then the 5. As soon as I started seeing one of those time frames go blue, red, I was like, right there. Then I started tape reading, watching for time and sales. I was listening to the pit at the same time, and then, boom, there's a 50 tick short signal. So I just took it.
Squeeze?
Yes.
Oh, a squeeze.
50 tick short squeeze, correct.
Okay.
And then you got out just on the change in the noise?
I did exit because today's a little weird day because tomorrow you got Greenspan speaking and stuff. They're all waiting on it. So statistically speaking, just from experience, it's going to be a choppy day. If you got something in the green and it's rolling, take it. Don't sit around there and wait for a gap fill on like today because it's a Greenspan day.
Okay. But the TTM bars did not switch color on you. It was just the noise changed that you got out? Or
Correct.
Did you start seeing
Correct.
blue bars?
I like to be in a move, and then when every other person is chasing, I like to go, you want to go short out here. Or, So, yeah. I always want to be a little ahead. I never want to chase noise. If I chase noise, I'm chasing. Okay? I always want to be in my trade, and then when everybody else is going crazy, like, yes, it's going lower. Like, yeah, here you go. And then just stand outside.
That's what it pays to be an altruist. Give them the thing.
What's like the highest noise level you would get out at?
You know what? The highest noise level?
When you say it was percentile, how do you know what that level is? I mean, you've heard it before.
There's no really. You just have to listen to it. I mean, if you ever hear, looking for a bid, you hold it for a while.
Yeah.
Because
If you're short, that's a good thing.
if you ever hear, swear to God, like when you get like crash days, I mean, that'll go down like 100, 200, 300 points on the Dow Mini, you'll hear some freaky stuff. Like some of the pit guys will be like, hold on, ladies and gentlemen, we're taking this thing to the floor. And it'll zoom straight down. It's because, everybody's jumping on the short side, killing it. Or if you hear, looking for a bid, it means the guy's going, dude, I want to buy something. He's like, no bids.
No bid. Well, it's funny.
It's like I'm taking orders.
Yeah. No, I'm not. Once in a while, you'll hear something in the background where some guy's like, hey, you want to make some money here? Yeah, go ahead. Okay, buy now. Yep, okay.
Yeah, every now and then
Yep.
you'll hear a guy do it.
Is that accurate? Or are they just bullshit?
No, we've heard that where the guy's like, what'll happen is like the different callers will come in. Like, who is is it Chunk that'll do that? But you got to fade him though. Whatever he's doing, you do the opposite.
Chunk is terrible. Chunk is terrible. There are a couple guys that you can hear what they're doing. He's a runner. He's a runner. A runner runs the orders from the phone to the pit.
And Ben lets him on.
No, sometimes you can pick up the ambient noise, and sometimes like if there's a new guy or somebody, they'll be like, all right, now, and they'll be like, cover it here. You'll just hear conversations where the other guys that are working on the outside of the pit, they're actually trading too.
Do you disregard that bull? Or do you
I don't pay too much attention to it. I like if I hear somebody do that, I'll mark it down on a note or listen to it and go, what if he's right? And be like, he was right, or nah, he got killed there.
Well, and if you want to make some extra cash, there's like some of the guys there that do a lot of sports betting, and Chunk is one of them. He like loses every bet he makes. He's like, yeah, I'm betting on the Sox this weekend, betting on the Sox. You're like, shorten the Sox.
He's terrible.
So John, you didn't make a gap play there?
This morning, the gap plays that I set up, they're pretty much done automatically. I set it up. A lot of the setups I do is like they're mechanically and they're just done. So on something like this, because it's set up as moderate volume, we're at half the gap fill. So it's what I'll do is just you take off half, and then it comes down, bringing the stop down to kind of where the entry was. So now you have a break-even stop. This is on the moderate days, and then right here it's actually going to be a reversal. If we can get down here and fill the gap, it's going to be the second half of the gap fill and then going long at the pivot. So that's the play that I've setting up right now.
But as far as the gap play, that was already mechanically programmed in, so it took it or it didn't?
The gap play the gap play is just, it's a done, I do it, it's like in a total separate account. So it's just like it's done, the parameters are in there, and it's either it takes it or it doesn't take it.
So if the criteria are met, the trade is on.
Correct.
And so it would have been this morning?
Yeah, this morning, the way the parameters are set this morning, the key things this morning that I look for in the parameters, it has to do with the pre-market volume. So this morning, pre-market Applied Materials is like trading 80,000 shares, okay, which is pretty decent. No, it was like, right at 75,000 shares. KLEC was trading like 40,000 shares, and then you had the other two, Maxim and Novelis trading under 30,000. So we had is just kind of a moderate gap. So on a moderate gap, it takes it. You have the same risk-reward ratio. In this case, it was just over 40 points, so 1-to-1. And when you come down, instead of waiting for the entire gap fill, when you get to half, it takes off half. And then from there, it moves the stop to break even, and then you've got the rest of it to play with. So now the second trade is while that's setting up, and then so while this is being done in the Dow, the second trade I'll set up, and then in the account that I'll do the day trading account is fading the first. I'm going to start looking now at like the pivot plays. In general, I'm not looking at doing any pivot plays until about 30 minutes into the trading day, with the exception being any move to the central pivot. So right here we've got the central pivot. In a case like this, I'll get over here I can see. So in a case like this, it's kind of interesting because it's like, okay, do you take the pivot in the SPOOs or the pivot in the Dow? It really doesn't matter. Generally what I found is that the SPOOs have a little bit more weight, okay, than the Dow in regards to the pivots. So if this were reversed right now, if the Dow were right here and the S&Ps were right here, I'd wait for the S&Ps. Because remember, the S&Ps, both the S&Ps and the Dow have a 90% chance of testing their central pivot at some point during the day. So now because the reverse is the case, if the S&Ps like do a retest here of the pivot, that'll probably drive the Dow down to the midpoint. So we're going to actually have to get the S&Ps to push through this pivot level to get filled here on the Dow. Now, which one you take it in, it doesn't really matter. It's just kind of preference, what you're looking at and things like that. You can see right now we've got scalper buy that had set up here in the S&Ps. We have the pivot here in the Dow, but we don't have any confirmation. And the main reason I like to watch the S&Ps here on the 233 tick chart is that the scalper buys and sells have the fastest confirmation. Okay, so what does that mean? If say you're short here in the Dow and you want to get out on a scalper buy confirmation, you watch this chart. Okay, so even if I'm trading the Dow, I'm using the scalper buy and sell signals on the S&Ps to get either in or out of that market. Does that make sense? Was there a no?
Why do you need to do that?
Because the S&P chart is going to be the fastest chart. It sets up the signals a lot faster. Yes, Jerry.
How does that correlate to the Russell? You've been talking, and also the pit noise. You know, Russell's kind of like a whole other beast in a way.
Yeah. Oh, you mean like in terms of looking at these? I mean, I'll actually use these. The S&P to me is the main chart to use for scalper buy and sell signals. So whether it's looking at the Russell or the Nasdaq or anything like that, I'm going to key off the S&Ps if I'm doing my other trades in that. I mean, 70% of my pivot trades are in the Dow. So if I'm in the Dow, let's say I was in the Dow here for a scalper sell, and we reversed here, and I'm still, because a lot of times what will happen is you're still waiting for it in the Dow, but look at this, you already had all the dots forming here, doing it there. And actually the S&P is acting a little bit better here this morning too.
My question is, listening to the pit noise, watching these charts, the Russell, I mean, would you trade Russell?
Dude, I've traded Russell like twice. Last Thursday. I mean, I had three whiff trades, and I was like, everybody always talks about the Russell. Let's see what it's about. I just both trades were good. It's a little thin though. I mean, you can't really do size in the Russell.
I wonder if you can correlate the pit noise over to that.
I didn't. You know what? I don't know. I mean, I can't tell you yes or no because I was just trying to, add a new market to my toolbox. So I just doing a breakout play, see how it acted. It probably would work. I mean, the big S&P is one of the thickest markets, futures-wise. So it doesn't. I mean, sometimes it'll lead, sometimes it'll lag. But if you can get a market feel for the internals and the mechanics and stuff like that, and then add pit noise. I mean, there's a lot of people in here that's going to hate pit noise when you originally use it. Give it 2 months. Don't just quit on it and going, Jesus Christ,
it drove me crazy
nuts.
like the first 3 months I listened to it. And then now I miss it. It's like, where's Ben?
Yeah. And anytime you turn it off, you're like, God, wonder what the real market's doing. I mean, because you can see the prices going like that, and you're like, I wonder if they're really buying or really selling, or are they propping it up or rolling it over? I
want to check real quick. Yesterday, we were talking about different squeeze plays, and remember the Swiss did a squeeze along, and you're asking me like, well, are you looking at on the 60 or the 30 or the 5? It was just a squeeze. So if you look at USD, let's look at 60-minute chart. Oh, I don't think I have the squeeze set up on this one. So like the squeeze on the. So we got it. The squeeze fired off here at 29.50, and let's see, Swiss is up 110 pips today, which I think that's actually new highs on this run. We can look at this. Almost. So we're like, I guess it's just retesting the highs right there. I'm going to check real quick to see if the pound broke down.
So now for the rest of the day, I can't really go short because now it's past 30 minutes and the put call's above 1. All right. The put call, I don't pay a whole heck of a lot of attention to it in the first 30 minutes. It takes a while for the sucker to get open. When I did go short this morning, the put call was above 1, but you got to give it at least 25, 30 minutes for the put call to kind of get open. You'll see some weird stuff on the put call in the first 30 minutes. Like sometimes you'll come in and it'll be like 0.32 or 0.23, and then everything will start opening up, and then it'll get to where it's really at. Sometimes it's accurate first 30 minutes, sometimes it's not. So I just have like the rule, let's give the put call about 30 minutes to open up, see if that's a real number, okay? So now like the rest of the day, I can't go short. Until it goes under 1, correct. If it drops, you're right.
But you're not really a trader in the first 30 minutes normally anyway, right?
Yeah, I'm going.
That period, but you did it today for the gap only, is that right?
Correct. I was just, when I first came in, we were gapped up, 50 points almost, 49 points. And I looked at it and said, pass on it right at the open. And what do you got up there? Anything?
What do you want to look at?
I was just going to put the charts up there. I can't really do it, though. I'll do it during, as soon as we break, everybody come up here and I'll show everybody what happened.
In the Dow, the copper trigger, and now we're waiting for the dot.
Oh, so, okay, I want to show you guys right here. So during the day, what's happening is I'm looking at these two charts. You got the Dow and the S&P. And then right next to it on another monitor, we'll have the radar screen. So, okay, so what's going on here? You've got, for sectors, you remember we started off all green. We're still pretty healthy here. I want to check and see where the brokers are. Okay, the brokers are still near the top of the heap here. That's positive for the markets. And what you're doing is trying to look and see if the market is going to sit there, and is it going to settle in? Is the market going to gap up and settle in and continue higher, or is it going to roll over? And this is what will tell you that. So let's look at the ticks. I mean, the ticks here have spent some quality time above 0 and below. So good day for tick fades if we get any tick fades that's set up. Put call, where's the put call?
It's 1 something. There it was. Oh, it just dropped below just now.
All right, so put call is 0.8. Now the trend cues, this is really bullish. It has not been trending higher at all, but now you can see that the trend has been trending higher. So you got a little bit of selling pressure coming into the markets there. Let's look at the tickies. I want to see if any buy programs have fired off yet this morning.
Mm-mm.
All right, so no buy or sell programs this morning. So you've got kind of a pretty quiet, generally a bullish opening. The put call is falling. It's not a concern unless this really starts getting under about 0.75, 0.60. I mean, between 0.75 and 0.95 is pretty neutral. Yeah.
Wasn't your gap play this morning, your gap play, really not a high odds play?
It was a moderate. It was a moderate gap play.
Everything that you were looking at, the sectors and everything that was going on.
Yeah, but remember that stuff I don't take into account for gaps.
So you don't take anything into account for gaps?
No.
Just based on the fact that gaps fill.
Right.
He looks at pre-market volume a little.
Except for the pre-market.
Correct.
Even the pre-market volume was bullish, not bearish, right?
It was remember, it was moderate. You had 2 of those stocks that were over 30,000 but less than 80, and 2 that were less than 30.
So it was a mixed.
It was a kind of a questionable play.
Yeah.
Well, no, there's a specific way to do that play, is that you don't hold on to the whole position for an entire gap fill. You're looking for half the gap fill on half, bring your stop down to break even, and then hold on for the other half. So there's a specific way to play moderate gaps, a specific way to play the low volume gaps, and then the high volume gaps you don't play.
What was your stop on that gap this morning?
It was like 40, I think when it opened it was like 43 or 44 points, so it was the same, 1-to-1 risk reward, so gap up 43 points, stop at 43 points. I'll have to log on and check exactly how they set it up.
1.5 to what?
If it's under 40.
Ah, right, okay.
John, what might change you were saying you were looking to buy the pivot. You got this trend that's gradually rising right now.
Yep.
The call's falling. So what might change your position
to do that?
To go short.
It's a good question. I mean, really, the fact of the matter is that most of the time, the first move to the pivot is a good trade. Okay, there's not a lot that's going to be able to happen that would say, you know what, I'm not going to take it. I mean, what I want to see is that the Dow just gets crushed here and drops 20 or 30 points. Where are we at? 652.
Yeah.
So it'd have to, sell off 30 points pretty hard, scare a lot of people. And I would just step in there and be a buyer right here with a 20-point stop. I'm willing to risk 20 points to see if I'm right there.
Regardless of the trend's rising?
Right, because what happens is, and then in a situation like this, even if the market is going to go lower for the rest of the day, the first move of the pivot will at least give it a little bit of a bounce. Okay, so either one, I'm going to get a scratch trade. I'll usually be able to, if the market's going to keep heading lower, I'm usually going to be able to get out a plus 10 on the first half, and then probably get stopped out on the second half. But if it's a move to the pivot and then bounces significantly higher, a lot of the plays that we looked at yesterday, where you had the first half at 10, and then you had these moves that blew through pivot levels, and you just stayed in until you got like a scalper sell. Those were off the initial pivot there. So not every move off the pivot turns like that, but if you are going to get a move like that, generally it is off that level. It's a pretty low risk setup. I mean, even if you're wrong, you generally get out as a scratch trade.
Came in this morning, you actually set up the pivots manually.
Yes.
You don't need eyeball close, that's all you do.
Yes.
And you would need to do the same thing every day?
Yeah, well, these pivots that we use, they actually will collect the data for you automatically. I personally just want to make sure that they're the right ones. So you have the option of overriding it and putting in your own high-low close, which is what I do.
And you're using 415
On everything but the Dow.
you use 5 o'clock on the Dow?
Yes, 5 o'clock on the Dow. Settlement prices. Okay.
So moderate gaps you play the way you said, I mean, in thirds, and then the low volume just in half, and high volume you just don't play them?
Yeah, so if you've got a gap and those 4 stocks have, if one of those has a volume over 80,000 shares, right, then I'm just going to pass on it.
Question.
Question for you, Hubert. Did you get in right at the open, or did you wait for that confirmation of that scalper trade?
I did. The question is, did I get in right at the open? No, I did not. The reason I passed on not going short right at the open is because on the TTM, the TTM was blue on the 89, the 1, the 2, and the 5. On 2 of those time frames, it was a little mixed. It was red and blue. But on 3 other time frames, it was all solid blue. So to me, that says, do not fade the gap on the open, which is kind of good because if I would have got stopped out because it popped a little at the open. Now, after that happened, the first thing I noticed was the TTM on a couple of those time frames started turning red. And I was like, okay, now they're starting to turn red. As soon as a couple of them turned red, the 50-tick squeeze fired off a short. And then I just took the 50-tick squeeze short. And the timing cells also, while I was tape reading, kind of gave me a clue that it was topping here. And the pit noise started getting real loud. So I just went with it.
Go market?
Go market? Yeah, I do all market orders.
How many
So,
Just a couple.
no, but say you want to do, say you want to do 10, 10, 10. You do 30 or do 10, 10, 10?
I did 100 contracts. I did 100 contracts this morning.
What did you do?
But you didn't break it up, I think.
You didn't break it up?
Yeah, I broke it up, yeah.
Yeah, it was.
I mean, I
40,
had an average
20,
field price. The software, when you set it in there, I'll just click and it'll go ding, 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 ding. It'll get my shares that I need or my contracts that I need.
So you're not putting a whole 100 in?
No. I may have to click the mouse 3, 4, 5, 6 times to get the whole
Like
100.
yesterday when it was slow and he's over here like banging the mouse key, I was like,
I was breaking up orders.
you could do a bigger order just today. How's that?
So y'all break up. I'll break up. I like to break up everything less 10, so because I watch 10 and above. So I'll try to break up everything below 10. Now sometimes you get a little sloppy, your finger slips, you hit the mouse a couple more times than you should, and you'll slide something in there above 10. But on a whole, I like to make it look like it's everything 10 and below. So I may have to do 10 10s.
But you don't get out at market. You get in at market, but not out.
I get out at market too.
As well?
Yes.
Do you do the trade station?
You would actually break up your trade if you were doing the same trade on the S&P? I have a hard time understanding.
No, only on the Dow. The Dow you can't. The Dow's a little thinner than the ES. On the ES, I'll use limit orders like John, and I'll just because on the ES, if you go market, you're immediately down a quarter of a point, and sometimes a half a point, because it trades in quarters, and you got the spread thing, and because on the S&P you have to have a really high focused laser entry. So I'll use limit in and limit out, or limit in and just mark it out.
Are your fills less than a second?
Yeah.
At some point, some days when you have this moderate volume, it's going to be the trade's not going to work, right? So you're going to get stopped out.
Right.
At what point, what's the thought process as you recognize maybe it's really a program that takes place? What changes your mind?
Honestly, I mean, when I get into the play, I mean, I'm done. It's what'll happen is, let's say I get into it like today. If we gapped up and we kept on going, if I'm short the gap, then if there's like some play like a long squeeze that went off on the S&Ps or something like that, I'd be long that.
Okay.
And generally what'll happen is they'll counterweight each other.
Gotcha.
Now, could I try to get in there and say, okay, I'm gonna. Yes, the market's turning higher, so I'm going to get out of this gap play. And no. Well, I could, but then half the time I do that, it turns around and goes back down, and the other half, it gets stopped out. So
Just set that aside and then watch your other.
yeah, it's like it's once the parameter's on, I'm done, and now I start focusing on what's really going on in the markets.
Looking at the gap trade this morning, I probably should have held it till the half a gap fill, but being in front of 45 people, you're a little nervous. And so all I did is I just etched out. I just made anywhere from 15 to 17 points on that move is all I did. I didn't even scale out because I was over here. I put the gap on and I stood up here and started talking. And then, noise got real loud, and then I went over and started scaling out real quick. So, I mean, statistically or ideally, I should have stayed in for the half a gap fill, and I should have scaled out. But, you get a little nervous in front of a lot of people, and, Not much. Huh?
Yeah, good thing you're not in right now.
Yeah. No, it's not bad, man. The slippage is not bad in the YM. A lot of people think that if you do a big order in the YM, you got bad slippage. It's actually just the market moving. Like they'll go, oh man, I got a bad feel on that. Well, it's because the market went from 10,002 to 10,008 while you were sitting there executing the order. It's not because you got slippage.
Oh, we are actually getting 1,000 tick here too.
So now I will be done for the day until 2:30 because it's pre-Fed day. I've already knocked out 15, 16 points. You would have to physically mug me to get those points away from me. All right? So.
All right, so we got 1,000 ticks here right into the midpoint. So this is a short setup right here.
No, because it's 1,000 ticks.
This is a short right here.
It's 1,000 ticks.
You do have, it's like a little bit of a heat because you got a long squeeze trying to fire, or it is firing off here. Well, so, okay, what time is it? It's 9:15. So it's one of those you just take it and it's look at it again in 35 minutes. So mental note, we're at 10, 6, 8, 8.
It's 1,000 tick. It's a tick extreme fade. 1,000 ticks.
You can still do that though with the squeeze firing off.
He is, yes.
Yeah.
He is.
So here you've got fade going on because you're plus 1,000.
Correct.
And you also have a short squeeze long.
No, not a short squeeze long. A squeeze on. Yeah, we kind of need to. It's a weird. Like if people trade, they'll be like a short squeeze. That means it's going to go up, right? Because squeezing shorts. It's just the indicator is called the squeeze. It's a squeeze long, which means we think the market's going higher.
But you got that counterbalance with the tick fade.
Right.
Right. In that case, literally, I mean, the thing to remember on this, a lot of the stuff is the setups are independent of each other. Okay. So, and this is something I'll go over when we talk about the business plan.
Will you take the tick right now or not?
Yeah, I mean, on something like this, okay, the parameters are waiting until, the first half hour of the market's open. I mean, we've got ticks on the upside, on the downside. Yeah, I mean, the parameters fit. I am not physically, taking it right here, but this is this is...
He's saying he would be taking it.
Yeah, paper short.
Yeah.
Yeah, this is...
If you were following the squeeze play, would you not take it because of the 1,000 tick?
Correct.
What'd you say?
What was that?
Question was, and if you were following the squeeze play,
right here,
would you not take the 1,000 tick extreme fade? Because
So here you got a squeeze play firing off into a midpoint with 1,000 tick reading. Okay, these squeezes generally, because this is a short-term time frame, right? 144 ticks. All right, these squeezes when they fire off last a few minutes, maybe 5 minutes, and something like that. My parameters on a tick fade, I'm going to hold it for 30 minutes.
See, I'd go ahead and cover it. I'd go ahead and cover that now.
Yeah.
At least half. If it was me.
Yeah, I mean, you can see. I mean, this is like, okay, we got a long squeeze into the midpoint at 10.668. So now it's already come down 10 points.
Cover half.
So it's one of those situations where the tick fade kind of always freaks people out because it's like, oh, it's going higher, but it runs out of gas pretty quick.
Yeah, and there is a lot of resistance also.
Would the pit noise help you on the tick fade too?
A little bit.
But again, I was talking about this earlier, and the thing to remember is one of the biggest things I guess to emphasize during this is that you're going to be looking at all these data points, and what happens for traders is they'll sit there and say, okay, well, gosh, we've got here's the squeeze firing off, here's the ticks, here's the pit noise.
Overload.
It's overload, and really what you're doing is you're using these to make decisions as to whether or not to take a specific setup that is part of your trading plan, okay? For me, the 1,000 tick reading with the parameters that we went over yesterday is a specific setup that's part of my trading plan. The other stuff is nice. I mean, okay, the trend's going higher, or the trend's going lower, maybe I shouldn't take it. That doesn't come in, that's not part of the tick fade. That's just part of trying to gauge general market direction. Is this going to go higher or going to go lower? But you've got to have specific setups like that are interdependent of each other, or it's just, you're just going to be kind of going back and forth, and you're not going to have any consistency.
And some of the trade setups are trend trades with the market direction, and some of the trades are counter trend trades. Like a tick extreme, that's a counter trend trade. And usually people fall into two classes. Either you're a trend trader or you're a counter trend trader. Some people can do a little bit of both, but it's, you just kind of got to decide what style you are.
But you're going against the squeeze here, right?
Yeah.
Absolutely.
Denise?
Yeah, I'm curious, Hubert, for you to talk about tick fades a little bit, because my thinking is you're doing a little bit.
I do it a little bit different than John.
Yes.
My tick extreme fades are, I kind of like the 12. Yeah, I'm already out half. First off, but I personally like plus 1,200 because it happens less frequent. And on the downside on the tick extremes, I like minus 800 because it happens a little bit more than minus 1,000. I will do a plus 1,000 or plus 1,200 as soon as it happens. I like to see. I won't do it as soon as it happens. I'll do some tape reading. I'll tape read and say, just like I did the gap this morning, I'll be like, all right, it's 1,000 ticks. Okay, now it's running out of gas, and then I'll jump in. I'll use like a 3 to 8 point stop, depending on if I'm scalping it or if I'm position trading it. As soon as it goes in my direction, 5 or 10 points, I'm covering up a half or three quarters and putting my stop, at the high of that move.
Okay, now if that's the case, wouldn't by the time you start running out of gas, the ticks are most likely going to be in the 900?
Sometimes not. Like sometimes you just have to stare at time and sales and read tape. Sometimes it'll be 1,000, it'll go roll over. Just because it's 1,000 tick, it could still be at the same price, and then ticks could hook down a little bit, and then I could go.
Because that's where I've gotten scared. It's like I wait for that other confirmation, and then they're only at 900, and then I'm like, oh shit, I missed 5 points.
What I'll use on tick extremes really is I'll tape read. I'll read the time and sales, and I'll read the tape, and I'll listen to the pit noise to give me, okay, go.
Okay, thank you.
At what price do we have a short of a tick, 1,000 tick? What
668 was when the actual. I just kind of like, okay, just fired off, mental, boom, 668, yeah.
Okay, so our stop will be at.
What do you do, 20 points?
A 30-point stop, 20-point target.
30-point stop and 20-point target. So 668 plus 30.
Dow. Ay.
No, look, 668 plus 30 points is his stop. So it's going to be like 690 something.
You call it the midpoint?
Literally, yeah, just the midpoint. Actually, I'll put up the label here on it.
So you set up midpoints between each of the pivots.
Right. So you can see there's the midpoints there. I'm gonna format it, go to inputs. You can move the labels over so you can actually see them.
Yeah, I'm gonna try like after Ben talks or when we get back from the CBOT, I'm gonna do kind of what I did with TradeStation yesterday.
Pretty much, yeah. Especially on choppy days.
I'm gonna put up the exact stuff, and I'm gonna kind of do
the
stuff that I only teach people that come to them
interested.
Okay, hold
on, guys.
All right, stare at this.
Okay.
What occasion would you not take a tick fade? Is there any sort of...
Yeah,
the ticks are like positive?
Yeah, I mean, there is a time, it's like not taking a tick fade.
What was the question?
Are there any times when I wouldn't take a tick fade?
Okay.
First of all, if it happens in the first half hour of the trading day, I'm not taking it, or the last half hour of the trading day. Or if after the first half hour of the trading day, like there haven't been any negative ticks at all, and you get a plus 1,000 tick reading, I'm not going to take it. Now today it's kind of interesting because it's like, look, we gap up, everything's positive, right? I mean, it's not really a bearish day at all, but then when you go to look at the internals and look at the ticks, we've got plenty of tick action below zero as well. Yeah. So you can see that even though there's kind of a bullish bias on the day, It's not a runaway day where you've got just fun buying, because the only way the ticks are going to stay consistently above zero and consistently generate 1,000 tick readings all day is when you got massive fun buying. Okay, most of the time that's not happening. There's just a little bit of some fun buying and stuff like that. Somebody else had a question.
I don't remember what the tick number is actually based on.
The number of advancing stocks divided by the number of declining stocks.
Yeah, so if you got like on the NYSE, whatever, there's I don't know exactly how many stocks. It's like 3,000.
Something
so
like
if you've
that.
got 2,000 of them ticking up and 1,000 of them ticking down, that's a plus 1,000.
It's fairy dust divided by 3 trolls.
Any questions on this radar screen? Remember on the first day we went through all the intraday indicators, so I just want to make sure you guys understand how all this stuff is working together. On the tickies, we've had one buy program hit, and you can see the tickies actually hit the buy before the ticks did. So the tickies faster. The tickies kind of the heads up in that case.
What do you use for a stop on tick rate?
3 to 8 points. I micro scout the tick fades.
Okay.
Like I want it to be go with me or against me really quick.
So yeah, and one thing you guys are going to see here, and I think one of the reasons that it's I don't know, it's interesting, I guess for us too, is like, in trading together and then talking to other traders, is that we're looking at the same stuff but doing it differently. So for me, I had spent like most of the 90s in front of computers, like trading really hard and stuff like that. I don't really want to do that anymore. So that's why my trading style would be a little bit more. I just put the parameters on and just relax. And what I found though is as you're kind of getting more, doing this for a couple of years or personality or whatever, that sitting there and taking all these data points in is kind of whether it's fun or whether it's it's something that you're very interested in. That's great. So the key is as you're looking at this, it's like, okay, we're looking at the same data points, and some of you are going to look at Hubert's style and go, oh god, that makes a lot of sense. Or you're going to look at my style and say,
second 1,000 tick reading.
Both make a lot of sense.
Yeah, and so you just kind of mix and match. Take what you like from Hubert, take what you like from me, and then make it your own. Because everybody in here has a kind of a unique personality and how they relate to the markets, and you just need to grab that and adapt it to what you're doing on your own.
So look, this is kind of important. On the second 1,000 tick reading, did price make a new high?
Yep.
Did it make a new high?
Yep.
Then market's probably going to go high.
We should see what the.
So you got stop out, George?
No, not yet.
What's your entry price?
668.
It's the same as I told you 3 minutes ago.
Plus 30. It's 668. If the market goes against him 30 points, he'll be stopped out. Right now, the market's only went up against him 10 points. Huh? This isn't a gap trade. Oh, on the gap trade.
Half of it was out. I don't have the thing, the login in front of me. It's like it was the half point would be like right about here. Yeah, because on the second half it's going to come down to break even on the gap, your entry point. Right. Denise, you have another question? Or are you stretching?
I was just going to do Hubert's long, short, flat for him.
You're going to do what?
I was going to say to Hubert what he always says in the room.
Yeah, okay, so let's say you guys are watching the markets right now. Are you going to go long, short, or are you going to stay flat? You're going to short, flat?
I'm already out. I've been long up there.
How many people are going to, if you had to make a trade right now, okay, gun to your head, long, short, or flat, how many would you go short right here?
Put the regular candles up, I'll tell you.
We got one. Yeah.
How many people would be short?
Don't be shy. Come on. This is not a 1, 2, 3, 4. Okay. How many people would be going long right here? Okay.
Oh, you big bunch of wusses.
And how many people would just sit there and do nothing right here?
Because you said no, you want a corner, you have to choose.
No.
Long, short, flat.
Long, short, flat.
Long, short.
I just had a position and just got out, but I wouldn't have kept it long. I just got out two bars ago. I was long down at the
right down at your buy bar down there.
Okay.
I've been long since then, and I just got out up there when your ADMA started to tick, and now it's starting to hook.
Yeah.
And I would start right now to consider short right now.
Okay. Denise?
Well, I mean, you said how many people would do nothing.
Yeah.
And doing nothing isn't actually quite right. It's like I would be flat waiting to look for like
True.
pullback.
And remember, at any given time, there's 3 positions: long, short, or flat. And flat's usually good most of the time.
Do a quick question.
Yeah.
When you talk about pit noise,
Yes.
and you say, I wonder what the real market's doing, it implies that
It just means
that it's leading the electronics.
it's not. It's the question is when I say when you want to know what the real question was when you talk about what's the real market doing. Just to me, for my trading personally, there's a high level of feel to the way I trade when I'm reading tape or scalping. So, like you can see bars going straight up on a chart, but if there's no noise behind that, it's not really a real run up. It's just like it's going up. Yeah, the prices are, but there's no volume behind it, and it's not really going to last. So I want to see how committed other traders are with this move. So I just want to know what the pit guys are doing and the crowd behind them. So I know if they're getting real loud, it's already over with. It's just another component. Like I'm real visual. I like to see things first, and then I'm auditory. I like to hear things second. And then the third aspect is feel, but I don't really have any much kinesthetic stuff in my makeup. But
he's not a real sensitive guy.
Yeah, I'm not a real sensitive guy. So it's not that the big S&P is, the real market. It's just I want to hear. So it's like watching a silent movie with subtitles. Pain in the ass. If I got sound, I'm like, that makes sense now. Now I don't have to say, read the subtitle and the text and stuff. I just want to get all my senses in it so I have a better understanding and feel of what the total market's doing, not the real market.
Well, and what happens too in the big S&Ps is that, most people like in here, we're all trading the minis, right? Well, the big S&Ps, what's happening is that's where the institutions are placing their orders. That's where hedge funds are doing the orders. And the reason is because if you've got some large hedge fund and their macro analysis tells them that they've got a risk of the market's going down 3% and they want to hedge that, and they've got to get short 5,000 contracts of the big S&Ps, okay? What they're going to do is just call their broker down there, and their broker is going to work that order over the course of a couple of days. And what will happen is you're listening to that, you're going to sit there and you're going to hear Ben saying, okay, Merrill's buying here, Merrill's buying 100 lot. No. And that's the kind of stuff where, you want to know what these guys are doing, because even though that most of the volume now is in the minis, a lot of times the price action from the big guys is still being done in the S&P pit, and they're working the orders down there and things like that too.
Although they will do it electronically as well, won't they?
Yeah, they will, but a lot of the big guys like that, the main thing too is cost effectiveness. You can buy one E-mini for, whatever it is, $8, or 5 for $40, or one big S&P, which is the equivalent of 5 minis for $8. This is saying, so you're getting. Right now it's interesting because of course, the CME will send its sales guys out to these institutions, going, with all these charts and stuff like that, saying, you guys shouldn't even be trading these big S&P contracts. You should be trading the minis. And they're doing that because that's more volume and more, stuff like that for them. And the big guys are like going, come on, give me a break.
But can you buy the big contract electronically? Or
No. Only pit traded.
What'll happen is there are some platforms where you can place the order electronically, but really what's happening is it's routed to the floor, and then you get a fill you get your fill a couple of minutes later and stuff like that.
You also hear sometimes you'll hear in the pits, minis got away from the biggies. Minis got away from locals chasing the minis. Locals chasing the minis. It just means that the mini market, the mini S&Ps, the SPOOs, have got a little bit away from the price of the big ones, and they don't want that to happen because they don't want the arb traders to go nuts on them. So they'll close the gap. They'll minis got away from the locals, and then they'll try to tighten up the spread, the difference between the big S&P and the mini. Okay.
Would you take that long if there's a
Which one?
It's a called,
right here? Oh, the scalper buy here?
Because in here, no, in the S&P, it did trigger, but it hasn't triggered the blue dot.
Oh, no, that's nothing yet.
It's nothing yet.
Nothing yet, no.
You were a little confused on the pit noise thing you said, because you said if the noise is going up, then it's likely to be over at that point.
No, I like to exit on the apex of noise. It does not mean that it will not go higher. If I'm long and all the pit guys get real loud, I want to give them what I have for them.
So how about getting into a position?
Yeah, I do not recommend you ever go long when the pit is really loud. Pretty much you're getting in late.
That's like going long a tick when the ticks are at extremes, kind of a thing.
Yeah.
Right, okay.
What you want to happen on the noise is you want it to go, You never want it to go, like that.
Well, what'll happen too?
Yeah, exactly.
Yeah. What'll happen too is when you first listen to the pit noise, it's very easy to get caught up into it, and so the pit gets excited, you get excited, and you just you jump in, and that's that doesn't work.
You mentioned that the big S&Ps, I think it was John that mentioned it, the big S&Ps have the big guys go in there all the time, the hedge funds and the bigger traders. Is that correct?
Here's the deal.
Because I'm having a hard time figuring that out because, quite honestly, the volume every day on the S&P is pitiful, except 4 times a year during rollover week, which then it scoots way up every day for 5-6 days.
The pits, here's how the pits work. It's all smoke and mirrors. The big pit is all smoke and mirrors. Let's say me and John are working together and we're in the pit, and I'm long 10,000 cars of the spoos, all right? And I'm long, and I want to sell them. So I send John down to the pit and I say, listen, go down to the pit and buy
We're buying.
buy 500 lots in increments of 30 at a pop. So as John's going in here to the pit and flashing, I'm buying, I'm upstairs behind the screen dumping everything we got. Okay? So, you never really know what they're doing in the pit, and there's just stories all the time about some pit guy showing something while his partner behind the screen is dumping their entire inventory.
Also, too, remember, and today it'll be kind of fun because we're going to have, Ben will be in here at 11, and he's going to talk about kind of how that works, and then we're also bringing an ex-floor trader in after we get back from the CBOT, and he's going to talk about, just kind of see how it works that way, too. So you got to kind of better feel of what's really going on down there. Because even though, like, the big S&Ps may only trade, like, say, 70,000 contracts, you also have to multiply that by 5 because it's really the equivalent of about 350,000 mini contracts.
Right.
So it's still decent volume. It's just it's the nature of the trading that's going on down there and the people who are trading it, and the reasons for it. And so that's really the main thing.
Even though, say, the volume per se is down about 80% from 7 or 8 years ago.
Right. Remember, it's down 80%, but the dollar volume is still it's not 80%. It's not only 20% of the minis. It's half because the contract's a much bigger contract.
But it's because the E-minis are taking off really well, and it's usually 4-to-1. The E-minis will do volume 4-to-1 to the biggie.
And it doesn't mean that the large institutions don't use the minis. It's just that they rely heavily on the big contract as well as the minis. Whereas most retail traders just do, we're just focusing on the minis.
All right, we're going to break for 5 minutes to change tapes, and then we'll start with questions again, okay?
All right, so we're going to go ahead and get started again here. What we've just done is we just covered pretty much the first hour of the trading day this morning. What we want to do now is in 1 hour, Ben Lichtenstein will be coming in. So what we want to do prior to that is we want to cover a couple of more play setups, okay? But first we just want to look at the markets. You can see we're kind of rolling over a little bit here. The tick fade that we did, I think it's kind of interesting. The tick fade is expired at 35 minutes, and we're at 10.663. So on this tick fade, you actually ended up making like 3 points. So I think this is a good example I want to show you guys, because on the tick fades, even when you're wrong and you're taking heat, generally when you get out, you're not getting out. You generally don't get stopped out of them.
Yeah, but how many people are in going, dude, John is crazier than hell. Watch it go straight up. Yeah, 31.
But I thought that was a good example, because it's like, you had all this buying pressure, everybody's getting excited, and look, it's fizzling out.
No, really, there were a lot of people in the room going, that's not going to work out too well for Johnny.
John, so what you did without picking, when you get out, at the time you got out?
35 minutes.
After 35 minutes, if your stop or your target hasn't been hit, you get out at the market. Okay? You can see right now, let's just take a quick look at the internals. On the internals here, you've got a market that with the ticks we had a nice little pop up here, but now we've kind of come back down to kind of an equilibrium. The tickies are really quiet. Put calls dead neutral at 0.86. The trend Q, very bullish here. Okay, this is the most bullish thing you can ever see in the trend or the trend Q. You open up low, you stay low, and you consolidate. The trend here has been a little more bearish. All right, so what we're going to do now, any questions on any of these setups or anything that happened this morning? Just kind of want to give you a feel of how it all works together.
I have a question.
Yes.
Go ahead.
On the scalpel 5 on cells,
Okay.
do you have to have just one dot or two dots to go?
A confirmed scalper cell is white bar, 1 dot.
Okay.
On the Dow, you haven't gotten a confirmed scalper cell.
Right. Remember, even if you're trading the Dow, use the S&P for the confirmation. It's faster.
Let me do something real quick. I know John's explained how he uses this stuff. There's 3 different ways you can use this thing, depending on your style and your personality and your risk level. So you can either wait. The most conservative signal is this: a run up, a white bar, then a red bar, and then a red dot, okay? And then a less conservative or a medium signal would be a white bar and either a red dot or a red bar, okay? Either or, it doesn't matter. And an aggressive one would be just a run up and a white bar, okay? You can use them in any combination that you want, but those are kind of the 3 type of risk levels or trading styles that you can use with them.
Okay, so any questions on that? What I'm going to do is we're going to minimize this, and we're going to go into some of the other setups for about the next hour or so.
John, did you get the results of your poll of your tick extreme play this morning?
Yeah, actually, it netted like it was like 2 points. Well, you can see here, we shot up here. This is when it went off. We went up, took a heat of 15 points against it. Came back down at 35 minutes. We were at 10.664. Entry was 10.668. What happened is the stop wasn't hit, the target wasn't hit. At the end of 35 minutes, we were at 10.664 for a net of like 4 points. Actually, I think that was like the best example. I actually like these things when
they don't work out too hard.
When showing how they work, showing one. And that's actually more of a kind of a typical one. Usually, it's not going to get stopped out. Usually, it's not going to hit its target. I would call this one. It was like, wow, that one kind of took some heat. Even if it's wrong, you generally still get out either with a small loss or a small profit. And one of those things, and there's some days, especially like on choppy days like that, where you'll sit there and just knock out 20 points, 20 points, 20 points.
I'm gonna go over brick plays. Brick plays are another version of like candlestick methodology. It's called the 3-line break or 3-point break. All right, they're pretty easy to understand. There's nothing magical about them. Some data feeds don't have them. Some do. All right. I use this for more of like a trend reversal, okay? Like just about 2, 4, 6, 8, about 20 minutes ago, it fired off a short in the market on the Dow, all right? So here's how the bricks work. Now, this is my interpretation of bricks or 3-line breaks. There's a little bit different code in mine. You can do it if it calculates it on the close or the high of that bar. So it's personal preference. All it's looking for is 3 consecutive higher closes, and you get a brick up, or a bar up, or whatever or a box, whatever you want to call them. And a down brick is 3 consecutive lower closes. All right. So the first thing you need to look for on the brick plays, or for the trend reversals, is you're looking for a swing high, or a pivot high, or a swing low, or a pivot low. Okay. Kind of like the scalper alerts that John uses. You're kind of looking for that type of thing. Okay. Second thing you do is you count back to the left 3 bricks, and for shorts you draw on the bottom of brick 3. For longs, you draw on the top of brick 3. Okay? And after it, same thing here. I'm just going through a long and a short example. So let's actually look at an example. All right, so the first thing you're looking for is a swing low, which we have here at 0.1, okay? That's the low of this move. So this is brick 1. You see these 2 little squares? That's brick 1, okay? So you count back to the left, 2, 3. That's brick 3. You draw from the top of brick 3, and then if the up brick closes above the line that you drew on the chart, then you go long. This is strictly just an entry technique or a trend reversal technique, okay? If you play them, I play them the exact same way I play everything else. 10, 10, 10, minus 3, plus 3, just scale out, okay? So you also have one right here. So here's a swing high. This is brick 1. This is brick 2. This is brick 3. You draw a line at the bottom of brick 3, and you would have went short on this brick here. All right, so let's go through some more examples. Here you have a swing high, point 1. There's brick 1. Here's brick 2. Here's brick 3. Draw your line at the bottom of brick 3. This brick closes below your thrust line. You go short, market rolls over. There's other signals in here. There's one here. Here's a good point because I get a lot. Here's a low point. This is brick 1. This is brick 2. This is brick 3. Next example. 3, 2, 1. Next example is just the bricks in conjunction with the squeezes, okay? Let me back up one, just make sure everybody understands the bricks. So the important thing is it doesn't matter what color it is, you just have to count them, okay? This is a low here. So that's labeled as brick 1. This is brick 2. And then this is brick 3. So you would draw.
Okay, how do you disable that?
You would draw the line at the top of brick 3 here. On this brick, you would go long. Does everybody see that the color doesn't really matter? Does everybody understand how bricks works? I know some people go like that and they never get them. Color doesn't matter. It's just you count the lows. This is brick 1. This is brick 2. This is brick 3. Draw from the top of brick 3. Okay? Because it's red, red, blue. But this is...
How do you know it's a lower though? How do you know?
How do you know it's not? You don't. You just keep drawing a line until that's a low, and then you back up. All right, to recap what you're looking for on bricks is you're looking for a swing high or a swing low or a pivot high or a pivot low, okay? After that, you count that as point 1. You count back to the left 3 bricks, okay? I don't care about color. I just care about the price. Is it bottomed or is it topped out? And a lot of people ask the question, well, how do you know that's a high? You don't. You have to just move the line up. If it makes a new high, you move the line up. If it makes another new high, you move the line up. Okay? So it's pretty basic. All right? Same thing for, so here we have a pivot low. This is brick 1. These 2 boxes is brick 1. These 2 boxes is brick 2. These 3 blocks here are brick number 3. It does not make a difference how many little bricks are sideways. All that means is you have not had a higher close, higher close, higher close. It's mixed. It's trading sideways. Okay? So what you do is you count brick 1, 2, 3. Top of brick 3, you draw a line. If this brick closes above the thrust line, then you go long. Distinction. Your fill will not be at the black line. It will be at the top of the blue brick, okay? Because that's where the bar closes, okay? Now, I do know some traders that don't let it close, but they'll put the line that if price action touches the execution line or the thrust line, they will go long or short on that line, okay? I don't personally do it. How I use this thing is I use it for market reversals, okay? Like earlier I said when we topped out there, bricks fired off a short, so the trend's going to change intermittently and we're going to trade down for a little while, okay? Here's another signal. Here's the top of brick 1, brick 2, brick 3. Draw the line at the bottom of brick 3. For shorts, it's the bottom of brick 3. For longs, it's the top of brick 3. All right? And once again, it does not matter on the color. This is brick 1 on a low. This is brick 2, and this is brick 3. You would draw a line right here, and that would be a long signal there, okay?
You wouldn't go long until the top of that next brick.
You actually would not get a fill until right there, though. Correct. All right? Now, the best signals you can get is if you get, like, a squeeze or a TTM change at the same time that you have a brick to kind of let them confirm each other, okay? So here I've just got some examples of, you're going along, you get a topping brick, brick 1, brick 2, brick 3, and at about the same time as a brick fires off a short, the squeeze fires off a short. It does not mean double up. It just means you've got 2 indicators saying it's going lower, all right? And it's, you know, it's a higher probability type trade. All right. Here's another example. We have brick 1 at a low, brick 2 at a low, brick 3 at a low, followed by, boom, a squeeze, almost at the same time. Market goes up. I use it for entries. You can scale out any way you want. I lately have just been using it for trying to help me gauge when the market's running out of steam and reversing. But when I do trade it, I trade it 10-point stops, and I scale out the exact same way that I do in gaps and in squeezes. Okay? I don't vary any of that stuff. All right? They're really easy to understand. Now, here's an example of a triple signal where they're all three lining up. Does not happen often, but when it does, it's usually a good thing. All right? Here you have the bricks that top, brick 1, brick 2, brick 3. Draw a line through brick 3. You get a short signal here that fires off a short here. At about the same time, a little bit later, you get the squeeze that fires. Now, the first signal that you actually get, which is a heads up, see the bottom here where the TTM changes from blue to red? So this one fires off first, this one second, and this one third. The market, you're short from around 102.54 or lower, like right here. I think the close of this bar is actually right there, so that's correct. And then market just goes lower down to 101.80. So, I mean, it's a good little move. I would not get the entire move. I'd be scaling out, obviously. Okay? Does anybody have any questions? It's good when they rotate. I don't really care in what rotation or order they go in. I just want to make sure that, you know, I look at those three. Those are my three that I always like to look at. So, like, oh, TTM was changing like this morning. Oh, now 50-tick squeeze. Signal, take it.
Wouldn't your TTM be more sensitive than this? So almost always the TTM would give you the same directional color? No?
It's mix and match.
Really?
Yeah. Another example. You have brick 1, brick 2, brick 3, short brick. Now the momentum is lost here. It's not really a signal, but the momentum is lost, and the TTM changes from blue to red. It's a valid signal. Okay? It's not a squeeze, it's just momentum was lost. You see how it fired off along here, and the very next histogram was shorter? Lost its momentum. Okay? And the one thing is, it fired off along here, and the TTM was like, yeah, good luck on that one. All right? And the same time, the brick fired. So you've got a little bit of conflict here, but this thing was actually, it fired off and then said, oh, I'm sorry, I was wrong. I meant lower. Okay? Like we talked about with the squeeze yesterday. Yes.
So I'm not clear on the entry. The last example, you have the three blue bricks.
Yes.
And you draw that horizontal line.
Yes.
And do you draw the horizontal line before the red brick is finished forming?
Correct.
So as soon as you have that, you see that the next brick is going down.
Yes.
It's red. As soon as you have that horizontal line, you can short it.
Correct. Now there's two ways of playing it. Like I will play it like I want this bar to close. I want this brick to close lower than that black line, okay? I do know traders that as soon as price touches that black line, they will go short, okay? Now, let's say that price didn't go lower. Let's say that price actually went higher, okay? All I would do is I'd take this line and move it from here to right here. Let's say it went again higher up to like 104.10. Then I'd move the line from here to here, okay?
Right. But in your example on page 332, the blue brick, the reversal, actually closes below the horizontal line, right?
On example, on 332, the brick actually closes
below the horizontal line, where normally you would look for that to close above the horizontal line.
Right, but the entry's on the second blue brick. Because the first blue brick never took out the black line. You see it?
Right, that's what I'm saying. Okay, the entry's on the second blue brick.
Because it has to take out that black line.
Okay. So, at 12025, I just thought that it's hard to look at the chart.
Here, look up here. So me and you will both look at the same thing. All right. So the signal for this trade to be valid is I have to have a up brick close above this black line. So the entry on this thing is actually about right here. Okay?
But that's I'm confused because you said long at 12025 up where you're
Yeah, right. Now, this is if the price touches that. There's two different ways to play it. If price touches this, you can either go long here when the price touches it right here, but I actually wait for the brick. There's two different methodologies. Whichever one, like if you're more of a scalper, go when the price touches it. If you're more conservative, wait for it to close above the line. Got it?
Yeah.
Okay. Anybody else? How I manage the trade, the exact same way. It has not varied at all. Okay? It's real boring. Like this morning. Bond trades. I'm going to switch around. Somebody see if you can find the Forex gap. I was supposed to go over it when we did gaps, but I didn't. All right, so the gap data on the Sunday Forex trade or the Sunday Euro trade, it's like 82 or 83% fill. What page? 131. Yeah, that's where it's at.
They're duplicates.
I think they're duplicates. Are they duplicates?
Well, that's only majority.
So you got the gap data back in the gap section. Forex fills its gap on the 6 o'clock Sunday opening 83% of the time. The way that I play it is, so here's the gap opening on Forex, okay? Here's where it closed on Friday. I use a 1-to-1 ratio, so whatever this gap is, I take that and make that my stop, okay? And all I do is I use a 5-minute chart. When the TTM goes from blue to red, I short it, okay? And then I'm just looking for the gap fill. In this case, it almost stopped me out and then went down, okay? It's kind of like one of those set it and forget it. It's like a John trade. How I came up with this trade is I've got a bunch of little corporate weenie buddies that think they want to know how to trade. And they're like, man, I want to trade, I want to trade, I want to trade. And I'm like, no, you should just work a job, work a job, work a job. And they're like, well, what can I trade? I was like, well, trade Forex because it's open, all night. And just trade the gap trade on Forex if you want to kind of get into trading a little bit. So that's how, and I just had to find a good setup for them that was a no-brainer. It's a pretty good high risk to reward ratio trade. It's like 82, 83%. And it's easy. It's an easy setup. Here's another example. Gaps here. TTM changes from red to blue. I go long and ride for the gap. Okay?
So how, I missed that story. How do you get your stop from where?
Oh, the number of the gap. Yeah. If it's gapped up 20 pips, I got a 20 pip.
What time?
What time's for it? 6?
6.
Right. On
6.
Sunday it reopens on East Coast time, 6:30.
Right.
In the evening? Yes.
Mm-hmm. So if it opened up, if the Forex opened up 120 pips, I'd be using a 120 pip stop. If it opens up 18 points, yeah, it's a 1-to-1.
4:30 on Friday.
Right.
Any pair?
Just a euro. I didn't do any back testing or gap data on any other pair. Just the Euro FX. That's it.
So do you
Pretty
guys
simple.
use it?
John,
PM or AM?
Sorry?
PM or AM? PM.
PM, 6 p.m.
Yeah, 6:30 p.m. on Sunday.
They're talking about the Forex exchange, not the CME.
Yeah, but it'll work on CME too. Yeah.
That was my question.
Oh.
Having traded Forex, can you translate it to
Yeah, it should work fine on the CME Euro too.
What about other days of the week or bonds? You use it on bonds?
I don't trade bonds. Other days of the week, no, because there's no real gap on Forex because it's like a 24-hour market.
I'll do the
So you measure that from the close on the Forex of when?
From the close on Friday
4:30 p.m. Friday
to the open on Sunday at 6 p.m.
6:30,
East
yeah,
Coast
6:30
time,
p.m.
6:30.
Yeah.
If there's a gap, I will fade the gap, just like we do the futures. I will use the distance of the gap. If it's a 50 pip, I use a 50 pip stop. If it's a 20 pip, I use a 20 pip stop. I put it on a 5-minute chart. When the TTM changes colors, that's my signal to go, to enter the trade. Okay?
And this applies to CME. CME also.
I only back tested. I only did the gap data for the euro on the FX markets, on the currencies. It would probably work fine on the euro on the CME too, but I don't know.
CME opens at 6 p.m. Eastern time on Sunday.
So this is specifically for your zone.
Yeah.
6 p.m. It's
And I have watched it on the other crosses.
It worked this Sunday,
like on
right?
the pound and the Swiss and stuff like that.
Yeah.
They do work pretty consistently on across the board.
But the Forex, I only trade the futures, but the Forex is actually pure cash market, right?
Right.
Yeah.
So you're going to have a little bit of difference in pricing.
Oh yeah, I mean you're going to see the cash, like the euro dollar cross versus the euro currency. The futures is going to be like 40 to 50 ticks difference, or pips.
So that shouldn't be
Right.
It shouldn't, but I
except as the contract matures, as we get closer to
It'll
the
narrow.
cash market, it's going to narrow.
Right.
Yeah.
So it starts out at 45, and you lose about 15 points a month.
Right. Any other questions on what Hubert's covered?
So how long do you let this go? Like,
until the gap is filled or until I'm stopped out?
Just stop losses from your entry.
From my entry, yes.
How much is a pip
No.
Day?
How much is a pip worth?
Well, you've been
On a
doing-
futures, what is it?
It's $12.50 per tick
on-
on futures, $10 a pip on forex.
Well, you've been
on that
working for
contract.
a little longer than 24 hours.
No.
So there is a time.
Yeah, I mean, I'll close it by the first day. I mean, if it doesn't fill on the first day, I'm gone.
What you can do is you can place your parameters and go to bed and wake up, see if you're still in it or if you're stopped or your target's hit. That's what I'll do.
You'll usually know pretty quick. I mean, you either the gap will fill or you'll be stopped out.
By the morning.
Usually, yeah.
did you say what the percentage is?
82 or 83%, and I actually crunched all that data myself, so I didn't hire out another firm to go crunch statistics for me.
2 years back or something?
A year or two. I
It's like
forget.
almost, I think
I think it was.
18
I think it was a
months.
year or 18 months, something like that. Yeah.
Is the stuff always 1-to-1?
That's how I play it. Yes, 1-to-1. I mean, if you wanted to use something else, you could, but I use 1-to-1.
Like, depend on the size of the gap, or
Nope.
no?
It
Always
just,
1-to-1.
it just
Surprisingly,
always
you would think that the gaps would be huge, but surprisingly, they're
small.
8, 15, 20 pips.
1-to-1. Yeah,
which
12
are-
pips,
yeah.
6 pips.
Well, but isn't that because you don't have a lot of news that creates the gap?
True, but I mean, it's
Yeah.
just a long time to me. Just watching the currencies all the time, that's a long time for them to be closed. You would think that there could be some action over the weekend, but I'm just always surprised that the gaps are so small.
Yeah.
But yet, that's true. I mean, most of the economic data and stuff's coming out during the week.
It's not going to be on Saturday. That's basically all you got to deal with is
Yeah.
Saturday. It's not going to be that much.
Okay, any other questions on that? Okay, what I want to do real quick before Ben gets here is cover one more play very quickly before we get into...
This is going to take exactly 4 hours. Because there's about 4 bond traders in here.
This will be really quick. This is like a trade that I'll do during the doldrums. I generally do this 3 days a week, Tuesday, Wednesday, Thursday, though it can be done every day. There are times when this will work, and on average, it's about a 70 to 75% success rate. There's times when this works 95% of the time, and times when this works about 55% of the time, depending on whether there's bond auctions going on, Fed meetings and stuff like that. This is a good trade to do during the doldrums. So now, right now, how many people in here trade bonds right now? So we got 1, 2, 3, 4. Okay, so 4 people. So how the bonds work is that, and the reason this play is set up is, as we went through earlier, if a bond moves 1 tick, it's worth $31.25. So on this particular play, we're just trying to pick up 4 ticks. Okay, 4 ticks on the bonds is like catching 25 Dow points or 2.5 S&P points. If now I want you to kind of keep in mind here these 1/32 levels. Okay. What happens during the bonds is that you got to remember the bond market is like 10 to 12 times bigger than the stock market. Okay, the bond market is huge. You've got mortgage companies coming in to hedge their loan portfolios in the bond market. You've got different countries coming in and trying to add liquidity to their data banks and stuff like that by coming into the U.S. and purchasing debt by using the bonds. I mean, there's a lot of money coming into bonds, right? So what happens is when these guys are coming in to hedge their stuff, they're not really worried about these 1/32 movements, okay? They want to get in like, okay, yeah, give me some bonds at 116 and a quarter, 116 and a half, okay? Their bid ask on this is like a quarter point. So what I'm trying to do is while they're doing these quarter points, I want to come in, just kind of jump in and pick off a couple of 30 seconds of their trades. So what'll happen then, okay, now let's do a quick quiz here. If the bonds trade in multiples of 30 seconds, okay, what's a quarter point level in the bonds? What's 1 quarter? 8 30 seconds. What's the half point level? 3 quarter point level? 24, okay. What's going to happen is those levels, the 8 30 seconds, the 16 30 seconds, and the 24 30 seconds, are going to be set up on the chart just like you would pivots. Okay, does that make sense? We're not taking the high-low close and trying to figure out these levels. They're the exact same every single day. 8, 16, 24, and of course the 0 line. Okay? So now, you've got these levels in place. What I treat them as is just very similar to the pivots. Okay? Remember with the pivots on the Dow, if it's coming down, I want to try to get a little bit in front of the pivots to get in. And if I'm trying to get out, I'm going to get a little bit in front of the pivots to get out. So that being said, let's do a quick quiz here. Let's say bonds are trading at 117 and 10/30 seconds. Okay, and I want to buy decline to the half point level. What is my order going to be? What is my limit order? It's okay. If
It's going down to 8 seconds.
Yeah.
If you want to get ahead of it.
Yep.
So you do that.
Right. Does that make sense? We're going to go over some examples.
26
but
is the half point level, right?
16.
No, I'm sorry. It's at 117.10 and you wanted to buy it a half point lower than that?
No. At the half point level, there's 8, 16, 24.
Oh, okay.
Right. Good question. So what's happening is, okay, there's a specific period of time during the day when the bonds get really, really quiet. Okay, it's generally between 12 noon and 2 o'clock East Coast time. During this time, the bonds are really quiet and they'll gravitate towards these quarter point levels. Okay, so what I'm doing now is I'm going to be in there fading moves to these levels. So if we're rallying up to one of these quarter point pivot levels, I'm going to be shorting it. I'm going to be stepping in front of it by a tick. If we're coming down to one of these quarter point pivot levels, I'm going to be buying it, and I'm going to be stepping in front of it by a tick. Okay? So we'll give another example. The quarter point levels are 16 and 24, right? And the bonds are trading at, let's say, 117 and 20-30 seconds, and I want to short a move up to the 3/4 point level. What's going to be my entry?
23.
Okay, yeah, you guys got it. So just kind of a review here. So you got 8:30 seconds, 16:30 seconds, 24:30 seconds, and 0. For example, that's like, the bonds at 117 and 8:30 seconds, 16:30 seconds, 24, and then when it gets to 0, it goes up to the next point level, which is 118. So we're looking to fade sell-offs to these quarter point levels and getting in front of it by a tick. Now, what I do with this is when I'm filled, I'll put a stop on the play of 7 ticks and a target of 4 ticks. Okay, and it's just set in like that. And so here's an example. Okay, so here's the bonds. What I'm looking at here is I'm not interested in this trade until we get to 12 noon. Okay, so here's between 12 and 2. And my criteria for this is that prior to taking these trades, for the prior half hour, I want them to have traded in a range of less than half a point, sorry. So half a point is 16:30 seconds. So you can see here we start off at 11:30, we're at about 1:15, and 8:30 seconds. By the time 12 noon rolls around, we're at 1:15. So does that meet the criteria? So what's a half a point? What's half a point in the bonds? Okay, and what's this range? About 8 or 9. So okay. It's a little goofy because bonds are still in fractions and it's a little different. So it takes a second if you've never traded them just to kind of understand it. All right, so now at 12 noon, what happens is we're trading right here. Now, incidentally, if it's 12 noon and we're right at one of these pivot lines, I'm going to wait until we pull 3 ticks away, up or down, before initiating a trade. Okay? So on the first trade here, we're a couple ticks below. So what I'm doing is I'm going to place an order to sell here and an order to buy here. Okay? So if this is at 115, where's my limit sell order?
114.31.
Right. I want to short right in front of the pivot level. This is the 24-30 second level, and I want to place an order to buy down here, a decline. Where's my limit order?
25.
25. Okay. So who doesn't get that? And don't worry about it. Okay.
I'm not good at fractions though, so I'm all right.
So why didn't they change it to decimal?
Because they don't.
I don't know. Right. So what happens now is you just bracket the order. So bonds are trading here. I place a sell order here and a buy order here. Place my parameters, and this is a great thing for like a ninja trader or something like that, and I'm done. Okay, I go to lunch. There's no reason to watch this trade. In this particular case, the market rallied back up to 115. It pushed through it. I was filled here at 114 and 31/30 seconds. I place a 7-tick stop and a 4-tick target. We come down, hit the target. At this point, what do? I check the time frame. We're still in between 12 and 2, so I just place the orders again. I'm going to short on any rally up to here. I'm going to buy any decline down to here. The markets look like they're going to come down, then they reverse, they go up, get short, 7-tick target, 4-tick stop. The bonds roll over, get filled again. I check the time. We're still within the 2 o'clock window. Place an order to short up here, an order to buy down here. Bonds come up, we get filled, 7-tick stop, 4-tick target, rolls over, and fills it.
Did you say this was a 90% play?
Now, the criteria with this is that on some days the probability of this play over the length of everything, it's about a 75% win ratio. And what we've narrowed down, there's days like FOMC day, employment number day, and Philly Fed. Okay, those 3 days a month, I don't do it. Low probability. The other days that it's low probability are on the auction days. And if you don't know what they are, you can get them off of Barron's online, or there's free economic reports out there where you can get them. So there's about 12 trading days a month, 12 to 14 trading days a month where I do these, and it's a pretty solid trade. Okay. Sure. I'm not going to do them on any day that Alan Greenspan is talking or there's a Fed announcement. I'm not going to do this play. And those are all announced. Any day where the Philly Fed's coming out, for example, the Philly Fed comes out on Thursday of this week, so I wouldn't be doing it that day. The Philly Fed comes out at noon, and that's right at that time, and generally the Philly Fed has an effect on the bond market. And then finally, the employment number day, the first Friday of every month. And then anything having to do with the bond, there's always a couple of times, the bond auctions and things like that. Yeah. Okay.
Why didn't you trade the move from 115 to 115 and 8/30 seconds down to the 115, go long at 115?
Okay. I know the answer. I'm going to just see if you think of the parameters. Why do you think? So yeah, I just want to do this between 12 and 2. Okay, and what you can do on here too is you can actually get lines that mark 12 and 2 on your chart too, just so you know to take them in between that time. Any questions on this? I mean, it's a pretty simple play.
There's no volume or anything. I mean, I don't know a thing about this. Is there just billions of dollars per bar, or what is this?
No. Remember, there's the cash market in the bonds is where a lot of this takes place. And then the futures market is where some of the hedging also takes place. Most of the trades are being done in the cash market, but there's also going to be futures done on it. The big bond contract trades a couple 100,000 contracts a day. And the 10-year notes trade about 2.5 times that.
The contract consists of?
One bond contract is worth $100,000.
It's a sissy market.
John, I may have misunderstood you, but I thought you said that you didn't take this play if the bonds move more than a half a point during the morning session.
No, the prior half hour. Yeah. The whole idea with this play is this is a play where you don't want volatility. You want a quiet market because it's just going to drift back and forth, kind of between these levels. I think I have one more example. So here's another example. And this is the chart I actually use on it. I like to use the black chart like this. You can mark the pivot levels here. All right, so here's 12 o'clock. Here's 11:30. In between this time, we traded in this range. Is that within half a point? Okay, so half a point is this. From here to here is half a point on the bonds there. So then what happens is at 12 o'clock, we're dead in the middle. And another thing I found on this with the higher probability days are when by 12 o'clock, you're actually about in the middle between two levels. I found it is a little trickier at 12 o'clock when it opens right at a pivot level. Okay. At that time, I generally will wait to see if it rallies up 3 ticks or down 4 ticks. But I have found on those days, the probability is a little bit less. Okay, my perfect trading day is going to be something where it opens up right in the middle. All right, so here at 12 o'clock, I place an order to sell a rally to 111 or to buy a decline to 110 and 24 30 seconds. Okay, so what's my limit order up here going to be? 110 and 31 30 seconds. And what's my buy limit order going to be down here? 110 and 25 30 seconds. Okay, so this goes along. I'm bidding here for almost a better part of an hour. We almost get filled up here for a short, and then you can see we got a nice little sell off here. Boom, get filled. Get filled here, and then 2 bars later, you're out at 4 ticks. So you're in at 25, so you're out at 29, 4 ticks. As soon as I'm out, place an order to short, in order to buy. It looks like it's going to get filled short again, but it doesn't. It comes back down, gets the buy again, chops around for a little bit, and then pops up and out there. Okay? Any questions?
What sort of volume can you reasonably do?
Usually on bonds, if you're doing anything, I mean, you can do like 25, 50 lots at a time, and you're not going to be doing. I mean, it's pretty good to go. Yeah. At this point, first I just want to see if there's any questions on anything that we've covered this morning yet. Any general?
Just one question on your last example here. When you got filled on the long, you went up, you got out, and then it came down through 110.24. You wouldn't get in long again on a buy stop as it came through. You waited till 0.3.
I may not totally. Okay, here. So we got long here.
Yeah.
Sold it here.
Right, and then it comes down through.
Got long here.
20. Oh, you got long right there.
Uh huh.
Oh, okay. Still long.
Yeah, the 3 should actually be here. It's just.
Oh, okay.
Yeah.
So you got long there. So you were. How close did you come to being stopped out?
So there's a 7-tick stop. So where would the stop be?
Okay.
So 25, 16, 17. So the stop's down here.
4-tick stop.
Yeah.
4-tick target.
And then up like that.
Okay.
Okay?
Yeah.
Anyone? Okay. So what we're going to do now, Ben should be coming in shortly. We'll go ahead and take a break here, let him come in, we'll get him set up, and then start when he gets set up. Now, after this, what we're going to be doing is when he's done, we're going to go to the Chicago Board of Trade. We'll kind of be doing like a group walk over there, which should be kind of fun. See if we can find a big flag and we can follow over there. And then we'll be eating lunch there too. Okay?